Hello everyone, once again. While I'm on a roll, I thought I'd do another video today, and this one's on type of technical analysis with respect to trading with time. If you look on YouTube, on the internet, you'll find a bunch of different ways of analyzing the market, from Elliott waves to demand supply, I don't know, smart money, trend lines, indicators, retracements, patterns, volume, whatever. Okay, so there are quite a few ways to analyze the market. So let's say there are about 10 of them. What really matters here is the style of trading, the technical analysis, and your style. When I say style, whether you're a scalper, whether you are taking a trade for a few hours, you're a day trader, or whether you're a short-term swing trader, because we do that as well, whether you're a long-term swing trader, which you can do that as well, or whether you're an investor. So whatever category of trader you fall into, you're going to use some kind of technical analysis approach that suits your personality. You cannot really take on somebody's strategy and do it 100% on you, because more often than not that doesn't work, simply because just like our faces are different, we're all different. Okay, so whatever technical analysis methodology you're using, as long as you got a grasp on it, as long as you can handle it, as long as that's your style of technical analysis and you know what you're doing with that technical analysis. If you're going to use timing, it doesn't matter what you use technically. This is why I look at a bunch of stuff. When we're learning, we look at trend lines, support, resistance, demands, retracements, Fibonacci's, patterns. What else? Wyckoff. You can use all of those. It doesn't really matter what you're using, like I said, but the important thing is whatever you're using technically, that you got your head around it. And the reason I use a few different approaches is because with timing, you can use anything if it works. And technical analysis doesn't work. It works sometimes. And that's the whole trick. So it works sometimes. And when you add timing to it, it works more often than not. This is why a lot of professional traders have less than 50% success rate. Their success rates are quite low, but the way they're trading with money management is obviously very important, and they take a lot more than they leave on the table. And another thing is they can add to their positions when their positions are strongly, they're going in that direction. So a standard normal trader sometimes just enters the same lot size with every trade, but pro traders will add on to that position once it's going in their direction and they've figured it out. That's like, okay, now we can add in and really pump up the volume so that we can really squeeze the juice out of that lemon. So there are a few things that are obviously different with pro traders, what they do, and what retail traders do, or what some other traders do, due to the change, or due to the differences, let's say, not the change but the differences in the way they approach risk, the way they approach trading, and how their psychology really is, because at the end of the day, trading has a lot of psychological factors in it. So on top of the technical analysis and the money management, plus your trader discipline, which is your psychology behind the whole thing, what's really, really good with the Global Trader Club is the time. Now, I've recently done a video, in fact today I did a video on how to trade vector days, and I've added that into the members area videos playlist, so take a look at that, because that's an add-on to what we were already doing, and it's a really good add-on because the vector days are going to give you the bias for the day. Like if it's a good strong day, we'll be like, it's a green day, we're going up. It's a red day, we're weak, going probably down. So despite the fact that nothing in life is 100%, it increases our odds to higher percentages of success which is what we'd like to have if we want to scale our accounts quickly. So if I was to get my head out of the way here and we open just any chart today, let's open Bitcoin. I didn't take a look at Bitcoin today, and it's Saturday, so it's still rolling. So for example, let's say you were doing order blocks. By the way, what was Bitcoin's trade days this week? Let's take a look. 6th to the 10th of April, Monday and Thursday, right? And we were looking at a flow routine week for Bitcoin. A flow routine week, and here are the days. So let's take a look. So Monday and Thursday. So the first thing you know is Monday and Thursday, and obviously the targeting, right? So we're always looking to target somewhere. We're not just blindly entering the trade. And here we are on a Monday. Okay, so Monday, and from last week, from the previous week, you'll know that it's we had Saturday. Let me see, I think we can go into the archive and check out the week of 30th of March to the 3rd of April, just before. And you'll see Bitcoin had Monday and Saturday, right? So that's your Saturday, that's your Monday, right? So Monday market goes up midweek, looking to retrace. Saturday we're back in action. Monday's again a trade day, bang it. And on the pullbacks, I said you could go up, and we're looking at 74,500. But obviously this is your primary place to be managing or taking some profit, because it's a gap closure. So if you know your technical analysis, what really gives you an extra edge is the trading days plus the hours to get in. So once you know the hours, you can add position, right? So for example, look, this is Thursday, all right? See how Thursday market comes back into a trading hour to a price where they bought before. This is an impulse wave. Okay, so we had an impulse to the upside. Okay, market now going sideways. This is a classic situation which we've learned. And then from that low, we're going to the upside. So once you understand your timing, you know your bias, and therefore you can go in that direction at your technical analysis price. So whatever technical analysis you do, it doesn't matter, as long as you can do it properly with money management. Just adding the time is already going to influence the success of your trading, because you're not just diving into a place, you're not just diving into the market. For example, here it's a trading hour, so you want to go up with it. Here it's a trading hour. See, that's London already, and that's like New York. Okay, like New York, early morning session, market comes down. See, from London, that's London morning. Well, that's actually Asia, to be honest. That's 4:15 my time. This is London. So market sizzling down to the same spot, and then New York just buying. So the rhythm of the market, if you can take care of it with technical analysis, you're already doing really good. Then all you have to do is just basically flow with the market. Okay, and Thursday was the trade day, right, for this week. So let's take a look. Again, let's go a page back. So Monday, Thursday. All right. So, and we've got a flow routine week. So all we have to do is just go with the flow. Now on Thursday, as you can see, the market came up here, retested the high of Wednesday, and that's when you could have taken your profit. And that's basically it. Did we have targets to the upside? Yes, we did. I still have this zone as a target, plus the higher zone as well, but looking to pull back to go up is a better option. Why? Because you don't want to be buying at a place where they sold heavy. All right, so even if you got targets to the upside, you can always say, well, you know what, I'm going to wait for the market to fall back and then I'll get in. The same thing with whatever you're trading. As long as your technical analysis is good, integrating the trading days, the vector days, and the intraday timing windows is the best way to increase your performance. Like here as well, on Thursday, euro dollar going up, retracement slightly at the trade hour, and then going back to the next trade hour. So all of these are going to give you much more planning opportunity. You're going to trade less with less anxiety and stress, and you're going to have good planning. So having the times, the trading days and the vector days, doesn't matter what technical analysis methodology you use, is definitely going to help you trade with a calm, relaxed attitude, knowing when you're going to trade, what time you're going to trade, not just based on price, but the day and the hours. And sometimes technical analysis, like I just said, technical analysis doesn't work. It works sometimes. So when it's sometimes, you can't say it's working all the time. But what we want to do is increase our odds with timing, and that's the whole idea. So sometimes you'll see people on YouTube saying this doesn't work, that doesn't work, because no one thing works all the time. Overall, it works if you keep discipline and if you have an edge to go with it. And that's why timing is the edge, because you can add it to any style of technical analysis. Sometimes I've even heard people say Fibonacci doesn't work. Fibonacci does work if you have timing on your side. For example, this is where the market jumped up, 3-tap pullback. So if you take a look at that, that's Fibonacci 37.5 50 zone at a trading hour, 50% at a trading hour. So as far as I'm concerned, it does work, and I've shown it on a bunch of videos how it works. The problem is you don't know what level it's going to bounce off at because you don't have timing. So that's why Fibonacci is also, with some traders, has a bad name. But you can also use Fibonacci with time, and if time, price match, and then you see that Fibonacci level is also closing a gap at the right time, then you go, okay, this is it. This is where we're going in. So to cut a long story short, any kind of technical analysis you do is fine if you got your head around it. Apply your money management, add in the timing to increase your success rate, also to lower your stop size, because your timing is going to give you a much better entry. You can keep your stop tighter than your regular trades, plus the targeting. If you know the targeting, you can also target with time. Okay, so if you already know, for example, that the market is going somewhere, okay, like on Thursday, yeah, I think I made a comment on Thursday. Let's see, Thursday. Look, here we have next hours 3:30, 4:45, 5:20. These are my hours, by the way, UTC plus 3. The market should then first get to 8:30. If direction is clear, it's likely to keep going to closing. So the first stop is 8:30, and that's 8:30. Now, as you can see, it didn't keep continuing to go up, but you can see why you need to get out here, because that's exactly where they sold before. You see? Bang, sell off. And you're up here at 8:30, as you can see down here, right? That's an 8:30 line. This platform is currently UTC plus 3. In the winter, it'll be UTC plus 2, but my hours will remain at UTC plus 3. So knowing you're at a target at 8:30, you're not going to push your luck. You're going to say, okay, you know what, let's just take profit and call it a day and buy. So knowing these things before they happen is obviously worthwhile in your trading. Let's take a look at Friday, because I don't work Fridays, but I do put the hours in there. Let's take a look at New York, for example, 2:45, 5, and 5:30. 2:45. Look, this is 2:45 right there. You see where the market is going, 5 to 5:30. That is your 5 o'clock. And that's your 5:30. And you see the market just doesn't go any higher. It sizzles back down. What did I have here? Let's see if I had an hour for that. 7:55 in the morning. Do I have 7:55 in the morning? Let's check it out. 7:55. That's your 7:55 there. So nothing really relevant. If we had an hour at this bar, if you know the way I trade from the videos, you'll know that I'm looking for a cause for a consequence. That's your cause right there. If I had a trading hour there, I would have said, okay, this is where we're going in now. Okay, it's like we go in and then you can follow it to the trading hours and then take a profit. So, but I didn't have an hour there. If you don't have an hour at the price, then let it go. Don't trade. You know, you don't have to trade. But more often than not, we do get those time and price correlations nicely. And also the trading days, like here going all the way from Monday into Friday, I think euro dollar was Monday and Thursday or Friday. So Monday, that's your Monday, that's your Thursday, Friday, right on the dot. Okay, so you can keep your technical analysis very, very simple, very, very basic. Money management, add your timing, and you should be cooking. Have a good day.